Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. My name is Ben Maldonado, and as always, I'm here with my partner, Barrie Hederachi. How you doing, Barrie?
Doing pretty well.
And we are recording after the market closes on May 5th, Cinco de Mayo. Happy Cinco de Mayo.
That's right.
Who's got the tequila?
Right here.
All right. So we have some energy. We have some stuff to cover. We had big week of news, a lot of movement. Some markets moved a lot and went nowhere. Other markets moved a lot. So we're gonna cover the big five with Barrie, which is ES, bonds, gold, crude, the dollar, the euro, and copper. And I'm going to cover the grains, wheat, corn, soybeans, and coffee in commodity land. So, but as always, we start off with Bitcoin, and I think Bitcoin is symptomatic. What's going on in Bitcoin is sort of symptomatic of what we're seeing in a lot of markets, which is for the last 6-7 weeks, we're basically stuck in a range.
Yep.
If you want to draw it off, I mean, you could do it like this. It basically defines where we've been for the past 6-7 weeks. Now, that being said, is it bearish? No. We are consolidating above these previous highs and these highs here, and we're sort of chewing through this resistance and trying to build a platform to push through. The key level, again, we work with levels, and then probabilities come off of those, is this 28.8 level, that we've been battling with since the middle of March. By the way, all the levels that we talk about, in addition to all the markets we cover, will be updated on a Google Doc spreadsheet that we'll send the link to when we send the link to the video. So it's boringly sideways right now in Bitcoin, but not necessarily bearish.
Right.
How do you see it?
It's definitely boring.
Mm-hmm.
It's sideways. And the fact that we haven't really settled above the line, I would look at it more with a bearish eye, but, we'll have to see how it breaks, because it's compressing. It's really not, it's really, if you take the April high and, draw a trend line connecting the highs, we're coming down. And if you connect the two recent lows, we have a
nice little triangle.
Yeah, right there. So it depends if we break it and run, or if we, break down and roll. So we'll see. I don't think it's at a critical point. So what to do? Wait till it.
Let it pick a direction.
Yeah, let it pick a direction. I mean, right. It is kind of consolidating on the way up, but it lost the momentum. It's not doing these quick corrections, and it's kind of elongating. So, which means there isn't a whole lot of interest at the moment, right? So
agreed.
So let's see. But you're right. It is consolidating above the old highs, so it's got that going for it.
Yeah, we just got to see what direction it picks to see where the next big move is. And listen, like a lot of markets, it could do like a false break higher and then turn tail down, or do false break lower and then turn up. So you just got to use your technicals here and watch.
Well, ever since we broke, yeah, exactly. And I was going to say, ever since we broke down, it hasn't really trended. We trended maybe a couple of weeks max in this whole time.
That's true.
A lot of sideways, a couple of jerky moves, a lot of sideways. So
very true. All right, let's throw it over to you. Let's jump into the big five and see what the week brought us.
Let's do that.
Man, we're back in that range.
Well, we never really left it.
Just couldn't get out. Yeah. I mean, we even came out of the circle, and we didn't get enough energy to pull out of this range.
Exactly. I was going to show you this. It's basically, there's another expanding triangle going on, right? If you look at this, if you can connect these highs.
Sure. There it is.
And we have these lows. There it is. And anytime.
I was going to say, of all the patterns out there, that is the most frustrating because you're constantly thinking, okay, we're breaking out. Okay, we're breaking out. And comes right back in.
Well, this is the pattern that would take all your money back.
Yeah, that's right.
It really is. It's kind of one of those fourth wave kind of patterns that would just take it all back. So you got to be careful, because every one of these expansions are a false break, right? So
that's right.
And it'll get you one way, and then it'll get you the other way, and so you got to be quick. And long as we're inside that, you have to really have that impression in your mind. Otherwise, you get caught up in everything else and you forget about it.
That's right.
So getting back to our chart from last week, can you see it okay? Is that clear enough?
Yeah, it looks good.
Yeah, big enough. Well, not much happened really. I mean, we had a lot of movement.
Had a lot of news and nothing and went nowhere.
Exactly. Well, just to pick it up, we talked about 4150 being the key level last week, saying that the markets are going to be weak below 4150. And
I'm laughing because you know where we are right now at 422. We're at 4150 and a quarter.
Yeah, it's too much. It's almost like a tease, right?
Yeah, magnet.
Yeah. Always, Fridays they always come back to our numbers. So
yeah.
Well, and we went, and support was around 40, let's say 4038, 4040. Almost got there.
Yep.
And we had this trend line, channel pointing up. We broke out of the circle, broke out of the 4150, came down hard for a couple of days, did a false break, and rallied. Now, all of this, for you guys, if you're not following us on Twitter, all of this is mapped out. This week I did 30-minute updates.
Yep, they were good.
Right? I mean, we caught pretty much all the turns this week, including the one down below. So it's easier with that kind of resolution to do that. If you look at this, it doesn't really look like much. But if you're trading lower time frames, then 30-minute helps. Maybe we might do a show on that later, one of these days, just to kind
of do the shorter time frames, like the 4-minute and the 30 and the 60.
Yeah, just to give an update, at least the 30, where we can still handle it. So where does it leave us for next week? Well, I hate to give you the number, but it's
the song remains the same.
The song remains the same, man. It's still 4150. If this keeps coming back to that same number every Friday, we don't have much to do. I mean, if the triangle is going to hold for next week, we're probably going to rally up to the upper end and tap that, 4250 area and maybe really test this 72 down from the high.
Sure.
I mean, that would be the natural thing to do. But I'll tell you what we haven't done is take out this high in February.
Right.
That came in with a bunch of cycles. So
that was a significant one.
Taken out. This didn't get taken out. So instead of a big down move, what we got was after this is sort of we went to this whole sideways dance we've been stuck in.
And Barry, think about the environment that this is happening in. Like in the last month and a half, we got bank failures. We got people, saying, "Oh, the Fed has done this and all this other mistakes and interest rates, and the dollar's going to lose its reserve currency." All kinds of negative news is hitting it, and it's not selling off.
Yeah, well, I think what's going to happen is all the negative news is going to be realized all of a sudden, all at once.
Right.
And then we're going to start something bigger.
Right.
We'll see. It is a weird kind of a market if you bring in the news and the sentiment, it's just unbelievable. But for now, hey, it's holding it together. I get there's enough money flow coming in.
Yeah.
To keep it all propped up. Fine. So anyway, we didn't even get to 4038. I'm looking at that as a sign of strength. And we did have a false break here.
Yep.
So that's also positive. Let's see if we have any momentum to take out 4150 and settle above it next week. If we do, like I say, next week, that'll be on the other side of the triangle that we drew out. So next week, if we can settle above 4150 early on, maybe after Monday, pullback or correction, to get up above that, then I think we have upside left. And I didn't move the circle. Like normally you would get a bigger break coming out of these things, especially in commodities.
Right.
But here I'm thinking, hey, until the end of the circle is out, which would be around the 11th of May, I'm thinking we could go from below and kiss it, and then drop.
Yeah.
That happens too. So
Sure.
I'm just keeping it on for fun at this point, just to see if it happens.
So for next week, we're just basically staying with the same numbers: 42.30, 41.50, 40.38, right?
Yeah, that's it.
Yeah.
And the 72-degree level would be 42.30. Keep it at that.
Right around there. Yeah.
Now let's take a look at the weekly, which didn't exactly have an exciting week either, but
it's continuing to dance around that 216.
Yes, it's doing that. And you can see that triangle, right? Expanding triangle forming. It's easier to see maybe on this. Not only, did it not do much in terms of bars, but where that 216 happens to be exactly at around 41.50.
Right.
So we're really close to that and really didn't, get above it. We don't have any highs or lower above that line. We're just chopping sideways. Last 6 weeks, basically, we've been rotating around the same area. The good news is, it doesn't happen that often. So when it breaks, we'll have to, we can look forward to some kind of a extended trend, I hope.
Yeah.
I hope that break isn't 2024,
Right. Right.
We're not too far away. We're almost halfway in.
I know.
The year. So the other thing is, just to point it towards like which side could it break to. If you look at the market here in 2021, early 2021, you can see how we messed around here, but on balance, we were on top of the square, right? And here, top of the square. Here we were under the square. Here, well, we broke out kind of a falls run up. Then here we clearly couldn't make it. We're back down. Couldn't make it. Now here you can notice if you can't make it, it'll basically turn down immediately.
Yep.
Looking at this, we're kind of pressing and pressing and pressing. So it's possible that we, end up settling above 41.50 and then make a run up at least to the top of the channel, which is no joke, right?
No, it's a big move.
A decent move. So let's be open to that. On the same account, the lower channel hasn't been taken out, so we have to treat it with care and not to make it do anything drastic. So let's see. Again, like I pointed out last week, we're still stuck between these two sort of measured points, these two boxes. I mean, here's the length of one box. If we stack two of them from the high, we're kind of exactly where they meet. So it's kind of that slack tide kind of an area also. You can see how everything kind of loses its momentum when it gets in there.
It's like a really nice balance point. If you look at,
yeah.
When it was above and below, it's just kind of balanced to there.
And it is 50% of the move, more or less, because if you look at this,
it's like a mirror image, actually, now that I'm looking at it.
Yeah. Here's 50%. So it goes a little bit above 50, and here's 50%. Goes
a little below.
So it's right in there. And that's why this is happening. So until we that's why we keep saying it's got to settle, one or the other, right? 150 and 150 just happens to be just right there. And that's why we're looking at that. And the 150 came in a couple of different ways. So, well, anything you want to add? I think that pretty much covers it for next week. And if you guys want to keep up with it, we're always updating it on Twitter. The accounts are in the description. And also, if you like our work, please remember to like and subscribe and maybe even share. That'll help the channel grow.
It's funny with my notes. I just said the daily sideways continues, support holding, resistance holding.
Yeah. Well,
it about sums it up.
Yep. And we talked about the expanding triangles and all of that. And we do have a false break here, which we will have to take with us for next week.
Oh, gee, look, something else going sideways.
Yeah, well, I mean, here, truly, I don't have anything to add other than to say, let's just wait out another week and see what happens.
Yeah.
What did happen was, we did make a 45-day move.
Right.
But it wasn't a new high. We just marked off 45 days in itself, not much. and it's holding below the equilibrium line. So we'll see if it's really going sideways. We'll just break through the line and continue to go sideways. And
that box is a good depiction of what's going on.
yeah, and bonds also. It's kind of stuck in here, but I think there's a lot more to happen. And like I said, longer these consolidations going on, and like you always say, the bigger the breaks that come out of it. So that's why,
That's true.
even though it might not do anything at the moment, I think it's important to watch them so we can look for clues to when it's going to break out.
Yep.
And bonds weekly, I wouldn't say it's any more exciting, but it is also stuck inside of this big expanding triangle. And at least we know what those limits are of the triangle. We'll see how that works out. For now, not much. It's the same as last week.
Yep.
We'll have to stay with that. Moving on to crude, had an exciting week.
Yep. Got a little false break there at the low.
Yeah, and they're going number to number. We called out support around this 64 area. And the 50% of the square, 135 degrees down. And well,
there you
was
go.
a low on Thursday. And we know there was good buying coming in, and there was a false break here.
Mm-hmm.
So that was definitely a low, and I posted that in real time as we were getting it in, I think, or pretty close to it. So for next week, let's see if we can break about 73.50. I mean, that'll be the big exciting thing to watch if we can settle above this. Otherwise, I think we have a new consolidation area forming, between the 64 and 73. So we'll see how that
the
works.
low looks good because I have weekly and monthly support right in there. In that 64 area, 64.23, 64.32, both weekly and monthly.
Yeah, I agree that low looks good. And I feel like what I'm not sure is if we're gonna, bolt higher, or we're gonna just sort of grind higher. You know what I mean?
Sure. Sideways type grinding.
If it's a grind, then yeah, we got the low. Unless you got in exactly at the low, a lot of people won't be able to trade that. It'll just be a little bit more difficult.
Yeah.
So, but it definitely pinned in an important low. So the second thing we can do is look, wait for the next pullback and see how that works out. That would be the second chance to get in and maybe get a little trade in on. Right?
Mm-hmm.
So we'll wait for that. Now, the support is very good, and you can clearly see it on the weekly, especially since I drew this box in 2 weeks ago. And that seems to be the low. There's no getting about that. And I think it was beautiful as far as the structure goes. We did the false break. It was very good. So at least for the time being, we'll see. But for now, at least basis weekly, we really need to clear this 50% of the square, which is right around 75, 74 and a half, let's say. If we clear that, we're really stuck under this. And remember, we did a false break up here. We talked about that when it happened.
Yep.
And then we came down to the false break down below. So it's setting up for some kind of a move at some point. And let's see how it goes. For now, we really got to watch this 74 level, because that's really the 50% of the square, and the market settling above or below will help us with that. If we can't really clear that to the upside, then we're probably going to be stuck in this range.
Chopping around.
Chopping around, yep. Which is okay. What to do?
Yeah.
Well, these were good times. Back in the day.
Right. When it was moving nicely.
That's the thing, right? When things move, that's why it's so important to focus on things that are moving. Well, like you do, you only cover things that are moving, because if something's not moving, it's just, what are you going to do?
It's death to your account trying to trade it.
Yeah, and plus, and probably your systems probably won't kick in anyway. You're not going to get decent signals in a sideways market, right? So
no, you hope not anyway, because it's hard to make money in that.
Well, here's gold. Very exciting, because we're up almost 135 days out. This little move here, we did 2 days hard spike. We did an inside day and we reversed, took out the low of the inside day. I don't really like this. Maybe this is sort of a typical kind of a gold move, but if you look, that similar thing happened right here.
It doesn't look like something ended up there, doesn't it?
Well, yeah, because look, we did this kind of a grind thing, kind of made into new highs, and we had this big blast day, got everybody in. The next day we rolled over, took out the low of the previous day, outside reversal, and done. And here, of course, it's not the same thing, but it's similar. It's a fractal of it, right? So I'm a little cautious here, and I think if you guys are trading this, I would draw this trend line up, and if this trend line breaks, and we take out 1981 that we talk about always, 90 degrees up from this low, then I think we could see some weakness in gold, and which could line up with some kind of a break in the market to the upside. We could have some flow going over there. And what do you think?
I agree with you. I think
happen.
Something ended, and it's just a matter of what kind of correction are we going to get. Is it going to be sideways? Is it going to sit on top of the 90, or is it going to be deeper than that and shake the trees a little bit?
Well, I think with this kind of a move where we get a false break, usually we should get a hard correction coming out of it, right?
Yeah. Yep.
And so we'll see if we get that. Otherwise, something ended is all we're left with.
I agree. I 100% agree. Something ended in gold, and we just have to see now what comes next.
Yeah. And this trend line, like I said, you guys, it'll help figure out, if we break it or not, and especially this 1981, which will be the 90 breaking of that. Now, if we can manage to sort of stay above, especially at the upper edge of the box, if we can somehow stay above, let's just say stay above 2000, that's still very positive.
Absolutely.
And then I would discount the false break and discount the pattern. But if we get into here and break the thing and also the 90, then I think we could possibly easily get back down into this 1940 area. Just retest that. And the weekly gold, of course, we have that 50% of the square up here, and we've been talking about it's hit it 3 times.
3 times now.
And of course, we get that false breaky look here. On this candle.
That's an ugly candle.
Yeah, well, it doesn't look much different than this one.
No, it doesn't.
Just be warned. We know what's going on. If it really breaks 2000, that'd be the first sign. And then 1980, just $20 below would be the second sign. And then we might have a long wait, or at least another chance to get long, play the long side. Short side.
And I think that's right. I think the overall pattern is still bullish. It's just we're looking at the sort of the next move, and the next leg is not looking so bright for bulls.
Yeah. Unless, like you said, we consolidate above 2000.
Sure.
And it's kind of a very bullish consolidation with higher lows and whatnot. I think that could set us up. But for now, we'll go with what we have throughout the yellow flag. Especially with this 135 coming up, right? So, and we went up to the quarter square. So it's close enough. It's an important spot. All right, moving on to copper. Another exciting market this week. But I tell you what's exciting is look how the square is holding.
That half square is holding like a champ.
It is rock solid, man. I mean, if I only had the balls to sell options here, right?
Right.
It's like he could do well.
Sell those puts.
Yeah. Sell the puts and he could do well. Anyway, far as trend goes, not trending.
Nope.
Far as momentum goes, is dying.
Yep.
So let's just leave it alone. Unless, the lower the range gets taken out, then I think I would get on it on the short side in a hurry, because we'd probably be a quick ride down into this area, at least to test these old consolidation areas. There might be short trade left in that if it breaks these lows.
I mean, on your chart, I see exactly what I have in my notes. The bracket is basically 4 on the upside, 381 on the downside.
That's right.
and it's just bracketed right now for there.
So long as it's above this 45, let's say 380, it's positive. We'll leave it at that.
Mm-hmm.
And if it takes out 380, it's going to be negative.
Yep, that's right.
At least in the short term. So here's the weekly. Again, you know, what happened was we kind of translated into the lower quadrant, so to speak, right? Because we had this sort of weekly consolidation here, broke out of it hard, then we consolidated up here in this upper boundary, and eventually, you know, we started to slip last week, and we stayed in there inside day, of course. So inside on a slippage, this looks negative. We could go a little lower and come back, or maybe consolidate in here if everybody's worried about recessions and whatnot. So it's possible. But it's definitely weekly is, I mean, in the bigger overall picture, it's still bullish. But on the shorter swings, you know, we're on a down leg, and let's wait for it to finish up. Right.
Mm-hmm.
Dollar looking a lot like copper.
Right.
But coming from the high, you know, square from the high. I would say the same thing, you know, either we are stuck in this, and if we take out the lows, we're probably going to quickly test 199 area is probably the next support. And as long as we're above, up in the above 101, right in this 50% of the square, above 101, it's stable. Let's just put it like that. And below, I think it could get a little weak, and we'll see how that works out. Even with all the FOMC stuff, not much happened here, right? I mean, we did come down a little, right? We went into it kind of strong beginning of the week, and then we lost a bit. I mean, you know, but we're holding the boundary on the lower side. And
I mean, look at all these different markets that are, you know, having this similar congestion pattern. It's really building for something.
Everybody's waiting for clarity, you know. They're not clear what's going to happen. So we wait, and we also wait. Forces us to wait. So
yeah.
All right, fine. All right, so the reason we're waiting is that we know the 90-degree line is exactly right about 100, right? And so long as we're above that, it's firm. I wouldn't say the dollar is weak by any means. And the reason I say firm is if you look at these highs, you know, 2015, that's pretty much at that same 90 line, right?
Yep.
And we're, you know, all this time, this is no joke, right? We're consolidating above those highs. So it actually means something. And so we're in there. So we'll see how we work ourselves out of it. But for now, it looks stable. It looks strong. We're on the upper side of the square, of the two squares, right? If you look at this as a full square, this is 50%.
Sure.
Of that. So it's strong. We did break this trend line. Well, so much for that. Sideways markets will do that.
Yes, they do.
So for now, we'll let it be. Next, we have the euro. Speaking of markets that didn't do much, Now, just as I was thinking today, you know, the dollar's holding above about that 50% on the daily here, and euro is holding above the 144 from the low, from the high. It's interesting.
Mirror image thing again.
Yeah. And well, you know, you have to go with the charts. As long as we're above the 144, let's say 109 area, it's firm, I would say. Euro's firm. But if we take it out, then we could get weak in a hurry. So we really have to watch that. Why is this area important? Well, because we're sitting right on top of the square, 144, right? So that's why you break from here, I would expect a sort of rather fast move. Just like here, you know, we sat in here for weeks and weeks and weeks, and we had the sort of false break up. Next week we came down. Soon as the low of that high got taken out, we had a really nice move down, right? So
Mhm.
same way, a nice move down followed by a nice expanding triangle that wiped everybody clean. And once
It sure
all these
did.
lower lows were done, higher highs were done, we took off. Came back for one last test. So yeah, I think it's stable up here. 109 is the key. If we take it out, I think it could get weak in a hurry. We'll see how that goes.
Mhm.
That's all I have for today. Let me put it back to you. What are you covering today?
We're going to cover the grains: wheat, corn, soybeans, and coffee.
All
An
right.
interesting thing, Barry, especially looking at your review, all these, sort of sideways moves we're seeing in different markets.
Mhm.
That rebel yell cycle that you and I have been discussing has
Mhm.
its next hit on Monday.
So that could perk things up.
It could. I'm going to be alert to see if things, bust out of these ranges,
Mhm.
once we pass through this cycle.
What's interesting is, the two things that moved this week during this cycle were things that come out of the earth, basically, right? Gold and crude.
And crude.
And of course, copper didn't get the email, so
No, it slept in.
slept in. At least two things moved. Anyway, let me put it back to you. Let's get it covered up.
All right, sounds good.
Not a lot happened.
Looks like Groundhog Day, right?
Yep.
Same stuff.
Yep.
When we last left our hero, we were battling with this full square, and we continue to battle with the full square.
Here it was hanging by its fingernails.
on the cliff, and then he pulls himself up and falls back down, and it is kind of comical, but this is the state of a lot of markets, right? We've been going sideways for 6-7 weeks. Here we've been crisscrossing this full square level, which is around, call it 13,120.
Mm-hmm.
Above it is bullish, below it is bearish, but it hasn't resolved yet. If you look at this whole structure, there's only been a few days with full bars above or below.
Right.
Most of them have been, crisscrossing, touching, going both sides of it. So the battle continues. If we break out, the half square is the target, which is this old high here. And then I drew in this ABCD to see, another potential target if we do break to the upside. If we break to the downside, I think the other thing that can help you is this trend line from the lows.
Mm-hmm.
So not much to do in this market either until we, pick a direction here and start trending.
Well, if we make a higher high on, next week without making a lower low, I think we could push higher.
Yep. And that bodes well for
above your
risk.
square. Mm-hmm.
Yeah. And it bodes well for risk if we can do that. And we've got that cycle hit coming on Monday. So it's possible that could be the catalyst. So we watch and then we let price lead us.
Yeah.
So that's NQs. Anything else to add, Barry? Anything else you want to add on this one?
No, we're pretty much the same pattern. So
yeah, on the commodities, there's a lot of correcting and a lot of sort of finishing up of moves. Some markets that are finishing up, which Barry referred to, gold, silver is along with gold. It looks like, they finished up a move, and now we're trying to see what comes next there. Sugar looks like it finished up a move to the upside. Cocoa looks like it finished up a move. We're not saying any or all of those markets are bearish. It's just we're trying to, sort of isolate the next leg and the next move and see what it looks like. And given the bigger time frame bullishness, see if we can get some bullish setups after whatever's through comes next. The ones that I wanted to look at today were the grains and then coffee, because those seem to be in a position where there's a decent probability we're going to get a good move out. So let's start with the grains. So here's wheat. Been talking about this one off and on this year as we've grinded lower, trying to isolate where we might find a decent bottom. And I think we had one of those spots this week. I called it out real time, put out a post a tweet
Mhm.
saying, hey, you gotta check this out. We got this big outside reversal bar on a
Yep.
daily basis on Wednesday. And then we followed it up with Thursday close near the highs, Friday close near the highs. Key thing here is the full square, right?
Mhm.
We're potentially turning this whole move down here into a false break.
Right.
If we get up and out of here, which today is the first full bar we've got that's on top of the square, and that's a good first step. So to me, this looks like a decent probability, not 95 or 100%. We never get 100% in the markets, but not even in the 90s. But there's a good chance that this was a low and we're sort of moving out of here. The structure of the low, of the move coming out of off this low is unknown. It's only 3 days old so far, but we want to drop down to the lower time frames, see if we can catch a decent pullback after this push out that gives us a higher low, and then we're set up for sort of a fast move higher. Could be something like this, right, where
Mhm.
we jump up out of here, roll over again, or it could be one of these, where you start up and then get a really, really big move, if the next bullish cycle of this commodity is coming in play. And because it wasn't just wheat, but we saw similar action in corn, which I'll show you, and similar action in beans, it kind of looks like it's sort of a macro call on this space, the grains. For some reason, there's going to be supply issues or weather or some issue that's going to cause shortages that's going to help this market move up in price. But we'll see how it plays out. First the pattern, then the news. That's the way it usually works.
Mhm.
Anything else you have to add here on wheat?
No, I think you called it out pretty well. And I think that last low looks like it could be some kind of a flush out, the final flush um going into that. But it's a little early to say. I'd like to see it like settle above 664 or so. That would be nice. So we'll see how it plays
Now,
out.
this was like that old pattern you used to talk about, the slow march, right? Is that what you're talking about?
It's like that, yeah. But here it's the fact that it broke below the lower trend line that was already established. And when I say lower trend line, I'm talking about if you connect the December low to the March low. Right?
Yeah.
Just draw one there. See that? See how we broke above it and got right back on top of it?
Mm-hmm.
So because of that, it's kind of a hidden pattern. So, we could easily have put in a, major low and nobody was looking.
Yeah.
Which is usually how it comes around. So,
well, I remember I was watching the price action on Wednesday, and I saw the grains across the board were down, and then they were down big, and I was like, oh boy, they're really flushing. And then, an hour later, I looked up and I was like, wow, wheat's green.
mm-hmm.
And corn turned green. Oh, soybeans turned green. I said, something changed here. And I said, let's see what the follow through looks like. That's when I made the post and say, look, we're working on an outside reversal day. Day's not over, but that's usually a positive. And then Thursday we close at the high, and Friday we close near the high. So
Well, the
definitely
low is good. I just don't know if it's the final low, right? I mean, we should
right.
get a decent bounce out of this, at least to go up and test the 50% of the square up there. Well, you don't have it. Let's see. Where is it? Your full square, I guess, right about there.
Mm-hmm.
No, wait a minute. What's level here?
Here's the half square's about 735.
I have about 730. Yep.
Mm-hmm.
Where's that?
Right
That's
here.
your half square too. Okay. Yeah.
Yeah, around 735 there.
Mm-hmm. Yeah, that's right.
So right in there.
Oh yeah, we have the same square. Yeah, that's right.
Yep.
Mm-hmm.
So we'll see.
Yep.
But it looked, the price action intraday this week looked like something shifted. So we'll see. We'll see if we get some follow through. All right, let's go to the next one. Here's corn. Interestingly enough, corn made a higher low than last July.
Right.
Wheat made a lower low, and it's been the low for the swing so far. And here, here's your false break. with that low there, and immediately reversal, close on the high, close on the high.
Mm-hmm.
Right near a timing too.
Right.
So interested to see if, how corn acts, as it gets up here to this full square. Do we get stuck under there? If we do, then it's got more work to do. If we can push above it, then that can tell us that this was the clean out move. I mean, look at that. It's just like gap, down, 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 down.
Yeah.
So,
yeah. Well, this outside reversal could set up for a big run up next week.
Yes.
Potentially, because it's been depressed for so long, right? So.
Right. So let's see. Again, it's higher low than the July low. And this reversal pattern the last 3 days we saw is it's a signal of some kind of change. What kind of change, we don't know yet, but it looks bullish. We're going to see how it plays out. Beans is a little less dramatic. I mean, it's similar to corn. You can see the same sort of movement lower, false break. But what I liked here is we held this full square. And we've got a third higher low, right? You have a low or second higher low, third in the pattern. First higher low, second higher low.
Mm-hmm.
If we hold here. So we're on this. We held the full square. The next push should be up to this half square. The half square is in, call it 1486 area.
Mm-hmm.
So that should be where the next push comes. Similar pattern to corn. Wheat was lagging, and then it's interestingly enough, when I was watching the three of them on Wednesday, it was wheat that led the way, and then these guys followed. So there's some macro news or macro call somebody made that put money into these things all at the same time, with wheat starting the party, and then these guys joined in, and the pattern is sort of a bullish correction because we're seeing these higher lows come in. So we'll see how it plays out.
Yep.
Let's go to the last one. Anything else to add on this one?
Well, just to say I have around 1435. It really needs to get above that to for it to shift the balance to the upside, other than a corner. So 1435, well, that's
right near the close.
Yeah. So if we can get above that, we're in good shape.
So let's see. They're on my radar this week to watch and see if we get follow through next week. Last one here is coffee. And coffee had an interesting day today. They really pushed down, and then we closed on the exact highs right at the half square.
Another mini expanding triangle.
Yeah, you can see that, right?
Mm-hmm.
But the thing that I like coming out of this low, which we've been on this thing since we made this false break low. Remember the wheat pattern we were talking about? Look at this. It's very similar, right? Down, 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 and then a big down washout that then reverses pretty quickly.
Right.
We'd love to see this sort of thing happen in wheat now, right? This move out of here, out of this low to confirm that that's a good low. But with coffee, we're further along in the pattern. We've got a series of higher lows, a couple higher highs. It's a bullish pattern. What I'm watching this week is if we can settle above this half square, we could be kicking off a fast move higher. And something I saw this week, a fact which is interesting about coffee?
What's that?
It is the second most traded commodity in the world after oil.
Wow. I wouldn't have guessed.
Crude oil. I had no idea. Second most traded commodity in the world after crude oil. So this is a market I like because and you could see the movements are it's a really trendy thing when it goes, man. It trends nicely. Chops when it's chopping, which you want to stay out of that. But to me, this has kicked off what I think is an upward trend, and we just need to see, price continue to confirm by making higher lows and making higher highs. So this week, the key for me is right near where we closed, in this, call it 189, 188 area. I want to see it close above this half square. We close above that half square. I think the full square is in play. which is about 212, 211, which, as you can see when you look left, is a really important spot.
Right.
It's good resistance. So if we get up there and test, I'd like to see how we do up there. What else do you have on coffee? I know you love to drink it. What do you think about the pattern?
Well, I think that low is good. It on a square of 9, that low comes in because we went up one cycle and we came back a quarter, and that would be that support at the low around 180 actually. And so from here we have a minimum. We can get up to 193 and 194. If we can break that, I think we're ready to go.
Yeah.
So it's worth trading, I think, this leg versus earlier on when the risk was higher.
Yeah. It's showing more and more bullish characteristics, which reduces the risk if you're trying to long it.
Yeah.
So for me, those
so
no, not at all. For me, the big ones this week are the grains. I want to see if we get that, the follow through from the last 3 positive days we saw this week, to see if we can really get some upside momentum going there. And then coffee.
Right.
Again, if we get above that half square, I think the odds strongly favor we're going to see a push higher in coffee. So those are the 4 that I'm really focusing on this week. Obviously, in addition to ES and NQ, which are, in their boxes trying to figure out which way they're going to go. I really want to see the effects of that Rebel Yell cycle hit coming in Monday. Different markets will be affected differently, but let's see if we get changes of character in those markets, because that'll be a clue to us that the balance has shifted and things are changing there. How about you? What are you going to be focusing on this week?
Well, I was going to watch, as usual, the S&P, crude, gold. They're both important this week, next week, and the dollar. Those are really key. And I'm also watching sugar because we could have a high in place, because we had a 45-day run up into a square.
Yeah, I agree with you on sugar.
Yeah. So that, and of course now coffee, since it's the second biggest thing, I have to start watching it closer.
Yeah.
That's great.
So we'll see. Is there anything else you're focusing on this week, Barrie? Like any aspect of your trading that?
Well, I'll tell you, I started to focus on the short term and to post on Twitter.
Right.
So I'm looking. I've gotten back. Well, probably because of all these sideways. I got a little bored, so I went back to my. So I went back to my 30-minute charts and pulled out the old systems, and so I'm trading that, and I'm posting stuff every few hours on what's happening. Well, not every few hours. I'm posting stuff on Twitter that's when the 30-minute gets into a critical area, right? Maybe a square or corner level. And I'm kind of enjoying that. And I started doing it kind of 2 ways. One, people like it, and we did a little poll, and everybody wanted the 30-minute was okay. But what it helps me do is, to stay on top of it. When it's just for me, it's easy for me to sort of forget or just get lazy and not worry about it or not look at things. But if I have to post something, obviously I'm going to look at it twice, and that's helping me a lot.
Sure. Are you using the 30 in combination with like the 1 minute or the 4 to day trade, or how are you using the 30?
I'm using the 30 to get the signals, basically pullbacks, corners, whatever, and I use the 4-minute to get in, to manage. Yeah, of course I'm keeping an eye on the bigger time frames, but the 30 minutes are the shorter swings. Like last few days, 30 minutes worked great, and so I'm focusing on that, and I might have to do that for coffee. That I'm going to go back and look at it, see, and it works. The 30-minute 4-minute combo works for crude, and it works for gold when it's moving. So if something's moving, then it works well.
Yeah, and this coffee does move. As you can see, the movements are nice when it starts trending.
Yeah, the thing is, it's far too in between, so you have to. But what I'm thinking is, it might be good to just have it on the screen, and if it's moving, great. When it's clicked into place, and then you just trade that for a few days or a few weeks, and then you move on to other things. Key thing is to know when something is trending or not, right? Because once you figure that out, rest of it's fairly easy. Just kind of either you have to buy it or sell it.
Yeah. I like
So-
how harmonic it is. I mean, look at the 45s here, right? 45, 90, then the half.
Right.
So
Yeah,
it
it's pretty
it
good.
reacts nicely to the harmonic. So
Mhm.
it gives you better confidence, that you can, trust the line and trade off the line when the setup's there.
Yeah, and there are some markets that are always harmonic, so you want to stick with those. And not that just because they're harmonic that they move a lot, but you wait for them to move and you trade those. At least all the odds are in your favor then.
I mean, that's the keys, right? And that's the basis of your work and my work is we try and isolate these sections where the market's moving.
Oh
Because
man.
otherwise, I mean, just look at, the last 6-7 weeks in the ES. If you tried to trend trade there, you got killed. If you tried to breakout trade, you got crushed.
Right. Yeah, yeah. You have to pick. I mean, you can pick any time frame. It could be on a daily, it could be sideways like the S&P, but maybe on a 30-minute, you can catch the smaller trends and you can trade those.
Right. That's why I keep saying it's a smash and grab market, man. You catch a leg and your profits there, take it.
Right, right. And
'Cause
today I'm thinking people should have a good sense of when something is trending or not. But what I'm getting is it's still not that easy, even from 100 years ago. Otherwise
Yeah.
everybody be on the trend. But the trends always stop. You have to know where. All these the trading issues are still the same.
It's also like you said, and this. I think a lot of people struggle with this. It's a question of your time frame too, because you could look at the daily and there's no trend, but if you're
Mhm.
trading a 4-minute, you could find a trend.
Right.
And so you got to make sure that the time frame that you're focusing on fits with your trading style or what you're looking for. Because I remember when I was starting out, that was really messing me up because I would be looking at one chart, one time frame and trying to trade another, and it can really mess you up in terms of finding something that is trending.
Well, you need to get your chart set, with whatever chart set that you're working with. Multiple time frames are okay, long as you know the order of operations.
Mm-hmm.
Sort of like doing your algebra, right?
Right.
You want to look, if you're trading the 30, then you trade the 30. Other things might help you figure out,
Isolate the legs, right?
isolate the legs, figure out the levels, maybe get the corners. But you use only one chart to trade, and then you can use a lower time frame to entry, exit, kind of fine tune the thing if you want to.
Mm-hmm.
But it really helps to use one. So you're right.
That's great. Well, look, I'm excited about seeing what reaction the markets have to the next cycle date, which is Monday, and being able to react if we get stuff moving and breaking out of these boxes, because it is a truism that after dullness comes chaos in the markets. It happens all the time. And anybody that wants to see something, go back and look at Bitcoin. And the week after I got frustrated with the fact that it wasn't moving, it went crazy.
Right.
And it's a perfect example of how that happens. So I know it's been frustrating that the ES or the S&P or something you're looking at has been going sideways, or false breaks on the top, false breaks on the bottom. But stick with it, watching it, because when it breaks, we're going to get a heck of a move in these markets when these things do break.
And I think this month we'll get a lot of moves. I feel like the volatility is going to pick up. So it's in the air.
Exactly. From your lips to God's ears. Let's go. We're ready.
All
Anyway, have a great week, everybody. Barrie, have a terrific week. Great job today, and we'll talk soon.
Thanks, Ben. Have a good week. We'll talk later.
All right. Thanks.